What's up, students? The video that you've all been waiting for, Nasdaq. How to trade Nasdaq. So here we are, trading Nasdaq, how to do it, and how you go about it. Okay. First things first, Nasdaq. My fib for Nasdaq, I'll have a 38.2, 61.8, and a 71%. Sometimes I'll add on the 88.6, but I know more or less it's like I normally do this. I go, okay, 71 is here, 88.6 is there. I do the same for 61, but it's just for references purposes. Put it on. You don't know where the levels are, but when you kind of have the 71, you kind of do this with your crosshair, and you know, okay, that's 61. This is 88.6 or 78.6, and then 88.6. Yeah. Anyway, so what I'm gonna do is I'm gonna go back to let's go back to May, and then we analyze June. Okay. So what you do is you go to the monthly time frame. Once the month closes, you're going to take the high of that month. Okay. You're going to take the low. What you're actually going to take, but May was quite Marubozi-ish. You're normally going to take the OHLC of monthly candle. OHLC of monthly candle. Okay. What does that mean? You're going to take the open, the high, the low. Okay, let me show you this candle for reference. See this candle here for June? You're going to take where the market opened, which was here, right? The high, which was that week, the low, which was this week, and the close, which was there. Right, so you're normally going to have for the next example, and I'm going to do, you'll have 1, 2, 3, 4 of these blue lines. But for this example, because we're working backwards, May and June, you can have a blue line and a blue line, because it was a very Marubozu type candle, so there's no real OHLC. So OHLC of monthly candle. Right, put it over here. Make it a bit smaller. In case we add on more notes. So the open, high, low, close of the monthly candle. Then we want to focus on, so this candle closed, so that means this one here is the 1st of June. So we're going to go down straight from the monthly. We're going to skip the weekly. We're going to go to the daily. Okay? And we're going to go back to the 1st of June. Yeah. Sorry, the 3rd of June. 1st of June was a Saturday. So now you go to the 3rd of June. The market opens over there. Boom. Now, when you had this marked up, this and this was basically what happened in the month of May on the daily time frame. Now, immediately, you want to look to the left. Now, when I look to the left, I identified this as a sweet spot for a buy, right? Because you can see there was 1, 2, 3, 4, 5, 6 support areas, resistance, then 1, 2, 3, 4, 5 support. And if you look at the overall trend on the daily, it's higher highs, higher lows, it's bullish. So when the market opened up over here, boom, it fell straight down and tested this spot over here. So how would you have got an entry based on spotting this before this candle even formed? So let's square this off, right? Just this one candle, and we're going to drop down from the daily down to the 4-hour. Okay. So this day basically started off over here. Right, Mondays you don't trade, so boom, it hit down on this level. Now, when it hit that level and you were trading Nasdaq, this time it was like all smiles, because now we're sitting on a stupidly strong support area. So from the 4-hour, you go down to the 1-hour. Okay. Now, when you're on the 1-hour, one thing about Nasdaq, before it moves, it likes to do spinning tops and like dojis. It's like, look at all the spinning tops, and it consolidates. Okay, so we delete this. So now on the 1-hour, this is a time frame you most of the time want to stick to once you've identified trend. all you know in your head is you want to take a long position. Okay, so once it got into the zone, you take your rectangle toolbox, you take it from the high of the wick over there to the low of the wick of the start of the, see, because this candle, this was May, June, right? So here, this candle, we can't use a doji, because why? You X out the doji. So I can't draw my rectangle box from there to there, because like I teach you guys, a doji is a nothing candle. It's an indecision candle. It's an invisible candle to my eyes. I don't like using it for anything. It's just a doji, so we X it out. So we use this candle because it was a spinning top, week to week, right? Now when you're on the 1 hour, let's say you don't want to drop down lower than this because you get confused or whatever, you use the 1 hour. We have the break, close, retest, like 1, 2, 3, 4 hours of retest. But if you went long in here just based on the 1 hour, after this candle retested, you could have put your stop loss below the 1 hour. But now I want to show you how to refine the entry from there. So from the 1 hour, go straight down to the 15 minute. Once you've identified that break candle, okay, where my candles at? Okay. Okay. So now we're on the 15 minute. So now on the 15 minute, on the 1 hour, you actually saw the break and the close. Now on the 15 minute, you'd see it basically breaks, makes a support over here, right? Over there. Goes up, comes down, retest. Now, I normally take buys or sells on Nasdaq just based on the retest area. I sometimes do wait for candlestick confirmation, but it's just how I feel, depending on the lot size I'm using, how strong the confluence is. But the fact that the 1 hour already peaked, it said up, closed above here, formed the support area. If you wanted to be like very precise, because I like support and resistance to be 1, 2, 3 candles. I love it. The number 3 in Forex is just amazing. So use the 3, 1, 2, 3 weeks. Price comes up, we wait, we retest, we go long. Right? Now, if you went long on this based on, let's say, you took your fib and you took it from the body over here to the high over there. Right? So now you have confluence of the fib that support area is also a 38.2. So if you're not willing to risk a lot, you would then go, okay, cool. Let me take the long position tool out. Let me enter on the retest, and I'm going to make my stop loss where the retest is. I'm going to make my stop loss 90 pips. Or let's say you're comfortable with 60 pips, because either way, this is safe for you. You're below that area over there. Your take profit would be 498. So now it's like a, here we go. So now it's like a 7.20. It's like a 1 to 7 ratio trade. So you get in on the 15 minute, boom. So from 1:30 that afternoon to 4:15, you caught 500 pips, right? 3 hours. But see how we broke it down from the daily all the way down. So now once you hit your target, once you caught your pips, you know, okay, cool, done, you're out of the market, delete all your stuff, and now you track it. Now you follow this thing, right? What happened over here? 7128. Let's go back to the monthly. What was 7128 on the monthly? 7128 was the low of the previous month. So what happened on the 15-minute time frame? Let's go back here. Come leave this box here so I know where it was going. So it broke above. It made like a kind of a, how can I say, a morning star variation, meaning it's like, let me just go closer. It's kind of like a morning star. Yeah, it's a morning star in an uptrend, right? It's also this candle's high, this 50-minute candle's high, support 3 times, poof, shoots off. Like the number 3 is always magic. or not always magic in trading, but like 90% of the time. Plus, you had this retest of the low of the previous month. And then also, if you look to the left, this candle was resistance, 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 then broke, support, 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 and off she went, right? Now you track this thing. And you stay on the or go to the 1 hour for more clarity. Jump off the 15-minute, go to the 1 hour. Okay, now I'm going to just fast forward time instead of going through all the examples and show you how you could have been buying this pair all the way from June. And yes, you can counter trade and get in sells, but if you look at the structure, you look at the fib, it's always safe to go with the trend. And there's nothing wrong with scalping a 300-400 pips short when you see the opportunity. So now I'm going to go back to the monthly. Okay, I'm going to use the high of June, the low of June, the close of June, and the open. Okay, so I'm lining us up now for, what's it, July? Yeah. From the monthly, we go straight to the daily. Where did July? So July, July, July. Where was the 1st of July? Yeah, 1st of July was 28th. Cool. So this was the what? What was 7691? This was the close, right? So this was the close, this was the high, this was the open, this was the low. Now in this area, so you wait for the first candle to form, 28th, 1st July, here we go. So now let's focus and go from here. You want to go straight down to the 1 hour. Now, so once you're on the 1 hour, on this candle, immediately if you take this last 4 or 5 days in June, okay, you can see there was some serious consolidation in this area. Serious consolidation. Again, just looking to the left over here between 26th of June, between 4 in the morning and 9 in the evening. Also consolidation. Okay, let's just start here. So it consolidated here, right? Broke out, went all the way up, came down, retested, morning star. Entry, stop loss. But remember, if you went onto the 15-minute, your entry could have probably been down here, like 100 pips earlier. You always want to get in on the 15-minute of Nasdaq if you want to squeeze max amount of pips, the smallest risk, maximum reward. So again, your break, boom, retest, morning star. Besides the rule of OHLC candle on the monthly, I want you guys to always pay attention to these two things as well. Structure. Candlestick patterns. Right? That's a must. You need to understand how to read your candlesticks. Because if you could pick up on spinning tops, you know that that's a reversal sign. You pick up on morning stars, you know that's a buy. Evening stars, buy, right? So let's go back up here. We want to take this area here. See again, even if you want to trade the opposite way. See here the support, 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 3 times support, broken, retested, fell. So if you are trading it from here and you are noticing this, you would have picked up, okay, cool. It's coming down, right? It broke out of this area, so it's probably going to retest this area and then bounce back down. Morning star, buy again. That's if you want to follow Nasdaq like a robot, right? You can make stupid pips on it, but you need to be watching it all the time. But always look to the left and look for the number 3. Okay, so over here, even if you put the body either on the candles, the candle bodies, on the wicks, either way, that candle was a clear break, right? And it broke above this wasn't the high, this was the close of the previous month, right? Broke out, but now we go to the 15-minute. How could we have taken advantage of the entry on the 15-minute? So we broke, we closed above the previous month's close. We formed like a, hangman, and then a spinning top. So knowing that we broke above the previous month's close, if we went in on a buy here on the 15-minute and put our stop loss below this week, would have had a stop loss of about 100 pips, right? 120 pips. Then your target could have been the high of the previous month, seeing that you're getting in on the close of the previous month. So if you take out your long position tool like this, and let's say you got in over there, stop loss below that week over there, 106 pips, and you take profit up there, right? So 945 pips. This would have been ridiculous. I mean, hitting a target of 945 pips in 15 minutes. And this is like what, 11 o'clock at night. This was stupid. That's not very common. But it hit that level to the T, came down, retested, and carried on. So now we're following it on. This is the 1st July. So now you can basically follow this pair. Now, whenever you see spinning tops and like just candles just all bundling together, you take your rectangle tool and you square them off. Square them off like this, right? You can do this on an hour, 15-minute. Boom. Breaks it. I would have waited for a retest, but it didn't quite get there. We were like, what, 7788? 77. It missed it by 20 pips. But let's just say you see the price gap, you're like, you know what? I'm going to go in over here. Let me take out my short position tool. Right, I'm going to go in over there. That's good enough for me. I'm going to put my stop loss up there. Stop loss 120 pips. Right, where would you work out your take profit? Now, to work out your take profit, getting in like this, what you want to do is the highest the candle broke out of. So let's delete this quickly. So let's just say this weak area over here. You want to do the lollipop. The lollipop move. Even though it didn't close, but this is the highest it moved out, right? So you'd measure that, and you'd measure the breakout distance, okay? So that's the highest. Let me make this thicker. Right? So that's the highest the candle went, so higher, and that's the breakout candle. So you go, okay, cool. So if I'm going to get in based on this information with my lollipop move, I'm going to get in over here because I want to get in on the retest. Right? Okay, even though it didn't perfectly retest, let's just say you took it over there because you saw, okay, it's pushing up. Let me jump in. I'm cool with 110 pip reward. Then you would go, okay, cool. So now you grab your short position tool. Get your short position tool out. You go, okay, cool. We're entering here. Stop loss is above that week, 130 pips. And just by looking at the lollipop, you go, okay, cool. I'm going to take it out there. So 130 pips for 450. That's a 1-to-4 ratio. You're cool with that. You're trading a 0.01. You're risking $13 to make $45. Done for the day. Or whether you're trading 0.12, you're risking $130 for $500. Whatever the case might be, this little lollipop would have told you when to get in and out. Cool. So you grab your profit. And now you watch again. And you're looking left all the time. Looking left, check. Okay, cool. Price now stalled over there. Now, whenever you see, even on the 15-minute or the 1 hour, you see 3 or more weeks, take out this little trend line. Oh shit. This trend line tool. Cool. Now you watch. Price comes up, bouncing around. Okay, cool. I've got in over there. Because all I'm looking for is buys. You take out your fib, take it from the body to this body. Right, you want to line the 0% up with that full body. So 1, 2, 3, 4, 5, 6 weeks, more or less bodies. You go, oh, on the 71, let me get in on the trade because it's 71. Stop loss is how much? 7745, 7739. Stop loss is 70 pips. And I want to get out on the high, right? Get out 770, so it's like 300 pips you score, right? Now you watch again and you see, oh, double bottom coming up. Because now you look to your left. Remember on the 15-minute, guys, I normally do this on the 1 hour. So it's a bit hectic on the eyes on the 15-minute. On the 1 hour, it will look a bit clearer. Where am I over here? Right, see how clear it looks on the 1 hour? Because now you look, okay, cool. At bottom out there, it didn't quite make it all the way down to this level. Let me stretch it across quickly. Didn't quite make it down, but what do we have over here? We have a morning star. Morning star, we buy. We ride out, you do the lollipop move, measure there to there, there, then you take the lollipop, drag it out. Not going to do that whole thing, but you take an eye, the breakout, shit. Measure it from there to there, move it across above. And remember, you bullish all the time. You know it's bullish based on what you did before, measuring the daily, weekly, 4 hour, you saw the structure's bullish. Now you take your rectangle tool, and while this is all happening, you focus on this consolidation area over here, right? Over here, broke out, close. What do we wait for? Retest. Boom, back inside the box, no trade. Sit in our hands. Boom, 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 breakout. When it breaks out, what do? We go to the 15-minute. Alright, so it broke out over there on the 15-minute. We got a retest. 1, 2, 3. 3 is the magic number. Buy, stop loss at 7767. Entry at 7773. 60 pip stop loss. Measure the breakout candle. We go back to the 1 hour. You measure the highest. So the highest the candle broke out. So you say, okay, cool. Over here. In the consolidation period, that's the highest we went. And the lowest we went was over here. Like that. Come skiff. Then you go, okay, cool. We went consolidation for that period. So we're going to get out. And we're going to take profit here. Right? Like that. Using lollipop method. This page just takes a lot of focus, guys. A lot of time looking at it. So now it breaks out. Go back to my 15-minute quickly. So your entry was over here on the retest. Why is my thing still there? Must be here. There we go. See, look at that. Look how perfect it is. We measuring the high and the low on the 1 hour, and when you line it up here, look at that. Look at this perfection. And that high and low on the 1 hour was made like how many days before the time? Flip, this was in the 26th of June, and then 2 days later, by using Mr. Lollipop, we get a exit point for us, which is amazing. So now we get in based on the retest. 1, 2, 3. Place our buy. Before we place our buy, we grab our long position tool. We slot in here. We get in on the base of this rectangle box. This is a nice one. Stop loss tight. I always go like for more than 50. So even though you could do like a 30 pip stop loss, I just accommodate spread and go, okay, let's do 60 pip. Let's take him up, measure Lollipop Man. Lollipop Man 460. So that's like a flippin' 1-to-8 ratio trade. Risking $60 to make $464. Or if you're trading a one lot, you would risk $600 to make $4,640. Good money. How long did it take to eat profit? From the moment of entry to take profit took exactly 1 hour, 30 minutes. It's the beauty about Nasdaq. And we used Mr. Lollipop to get us an exit point. Alright, so now we delete Mr. Lollipop again. And then we delete this again. And now we watch again. Now we watch. People that phone me while I'm busy recording audio. Recording a video. Almost messed up my 24-minute video, Clayton. Delete that. Okay. Yeah, he's still calling me. Hey, this guy can call it the best of times, eh? At the best of times. Okay, cool. So go back to the 1 hour. Okay, so we got our entry out here. Okay. Delete that. Spinning top, spinning top, spinning top. Now, okay, cool. All the spinning tops, all these weeks. Let's draw a box around that. Because now we can counter trade this whole thing over here. Boom. We draw the box around him. On the 1 hour, we go to the 15 minute. Okay. On the 15 minute. Now we look. Now we just readjust our box. Make it nice like that. See, okay, that's the candles. That's the low. Cool. Now we wait. Boom, boom, boom. Bounces up, bounces down. Boom. Breaks out. Breakout candle. Immediately when it breaks out, we know, okay, we got 15 minutes before the next candle comes. So we quickly go, grab the lollipop. We measure the highest point, right? From the top over there down to the breakout distance. Okay. Cool. So now we got the highest that we went and the breakout candle. What do? We wait for the retest. The retest almost like a puppy away. If I see it gets that close, I jump in. It's like a retest for me, because what I want to do is I want to grab the short position tool and I say, okay, cool. If I get in down here, right? If I look at the low of this candle here and I get in on the same distance, and my stop loss is above this candle, it's 133 pips. Now I use my lollipop method. So if I'm going to enter here, right, I want to see, okay, is it worth it? Risking 133 pips for 460. It's not bad. It's like a 1 to 4, 1 to 3.8 ratio. Get it on the trade. Boom. Take profit. Once again, lollipop man is spot on all the time. Look at that. Like when that first candle came down, hit, and then immediately it moves back and you're like, whoa, the lollipop man saved me again. But eventually it formed a double bottom with the rest over here. See, 1, 2, 3, 4 level of support chilling over there. Guys, you can use this and you can backtest. You can counter trade. Be careful when you counter trading. You can trade with the trend. But the thing is this: look for your spinning tops. Look for your candlestick confirmation patterns. Look for break and retest of a consolidation zone after you draw it out, okay? And then you draw the lollipop from the high, not necessarily where the close is. You draw it from the high to the breakout distance. So you draw it from there to there. Just watch the video again if you want to see what I did before. Obviously, measure it, get it on that. You won't always find the perfect 71% retrace. A lot of the times there is those retraces where you're going to get in, like let's say over here. If you drew from body to body like that, then you're going to get like these 71% entries. But this you can draw on either the 15 minute or the 1 hour. 4 hours way too long. Only draw your fibs on 15 minute or 1 hour. Base your entry off of that. To get the perfect entry again, you would go, okay, cool. Let's see where the low was. Once you now get your fib, you see, oh, price is pulling back, pulling back, pulling back. You're watching it. Now, must know it's 15 minutes per candle. So you go, okay, cool. This area was broken. It retested with these two candles. So I can either get in over there for a sniper entry, or I can pull this down and get in like that, or like that, right? One of those two. Again, you grab your long position tool. You say, okay, cool. If I get in over here and I put my stop loss, and again, we're on the 15 minute, and I put my stop loss like this. Let's call it 60 pips to be safe. And we take it up to 61.8, like that, right? That is a 522 pip take profit for 60 pip risk. Insane. Completely insane. And if you went to the 1 hour, let's see if we could have found a consolidation zone. Just delete that. Delete that. So let me draw a box around here. So the box is over there. Like that. Like that. Okay. No shit, sorry, I'm doing it wrong. We draw it. Okay. Again, let's just see now. Now we're on the 1 hour. So from the breakout candle to the low. So now we go, okay, cool. This was the lowest. The candle went. This red over here was the lowest. And the breakout candle was up here. Like that. Right? So that's where it broke out from. Now besides this one we got in over here, if we did that, we would have seen, oh, if we got in over in the 71, we would have take profit to the T. Just look at that. Like, if we got in down there, boom. On that area there, by using that technique, we will see, okay, price literally almost comes out to that breakout candle and then starts reversing slightly before that push up. Or even if you used it for, okay, cool, I'm going to trade on the 1 hour. I'm going to look at this. I already took profit here. This is where the candle retested. So now I'm going to put the retest like that. So I'm still using that. Go, okay, cool. This is the retest area. Take profit over there. You could have used it twice. Over here and here. And I'm sure if you drew the fibs on this is probably a 38.2, I think. If you take it on the breakout. I don't like that. I don't like it like that. I would have just used the lollipop. But either way, guys, I hope you're not mind blown by something as simple as this little trend line tool where we measure the breakout distance and the lowest distance after the consolidation box. That's basically my secret to trading Nasdaq. And I trade it when I want to, because I focus on major pairs because of the signals trading room group. But when I do this exact same thing I'm showing in the video. I get in, go in with like stack 5 or 6 0.12s, boom, 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 done, out, finish, klar. And then I just chill and focus on other major slow moving pairs. And I'm just on the 1 hour and the 15 minute. And I'd do this, I'd follow this the whole time, right? I'd do this the whole time. I would basically do this. When the month ends, I'll do the beginning part of the video and then take it from there again. So, like even if you look here where it broke out, look how the candle tested for the next move. So here where we broke out like that. See that candle came down. Support, resistance, resistance, resistance. 3 times, important area. Break, we come down and we retest. Morning star pattern, off we go, up. Too simple, guys. Use the lollipop, draw the breakout to the bottom, measure the distance, take it from there. Same if you were counter trading from year to year, drawing the box like this. Right, on the 1 hour, getting your box drawn out. So where was the highest the candle went? Not that high. It was that week over there. Candle. Breakout candle was still there. If you entered on the retest like that, somewhere there, more than enough. And also, if you look to your left, you'd have been like, okay, it is a good exit point because it lines up with the support area over here. But it did carry on falling down. It's not a magic tool where it will just go, oh, up the lollipop, stop there, it's time to reverse. So yeah, don't look at it and go, yo, I only took so much profit and it fell here. Don't be greedy, guys. I promise you. Go watch the psychology lesson again on greed. Greed will kill you every time. And I just want to end the video off with this note. Trade what you see. Don't trade what you feel. One more time. Trade what you see. Don't trade what you feel. It's that simple, guys. Stick to the rules. Stick to the basics. Stick to this strategy. And I look so forward to seeing the crazy ones that are trading Nasdaq. I look so forward for you guys sharing your profits with me in the next coming weeks after watching this. And I know I'm going to be shocked again to see the amount of profit you guys make. And it's always stupid to see it. So please don't forget to, if you want to tag me on Facebook, if I don't maybe reply to your DM, tag me. I'll repost it. And once again, let me know how this video goes. And yeah. Enjoy, guys. I'll see you on FOREX 3.0 But for now, 2.0 is more than enough, plus the initial course, to get you bags and bags and bags of pips. See you soon, guys. Peace out.